Welcome to another episode of Thomas Talks on Thursday, and we have a special guest today. Jake, do you want to introduce yourself?
Hey everybody, how's it going? I am Jake Reed. I am a mortgage originator with Halo Capital. A little bit of background on me: I've been in the mortgage business for going on 7 years. Started at the bottom and a closing department, and kind of worked my way up into a mortgage industry, and decided to take the leap last year and go full time commission, and been helping people ever since. So, looking forward to it.
Sweet. Do you want to talk really quickly before we get into like our main topic? You are a mortgage broker with Halo.
Yes.
You want to
Yes.
talk about the highlights of what makes that different than just like someone going to a local bank or anything like that?
Absolutely. So, what I try and equate it to that most people have dealt with in the past is an insurance broker. So, an insurance broker versus like an insurance agent for a company. So, an insurance agent for a company only has that company that they can use, whereas an insurance broker may be able to shop, 10 different options. Same thing with a mortgage business. Instead of working for one bank, I work with a multitude of banks that I can take your loan and kind of shop around with the information that you and I discuss, and we can shop it and make it the best benefit for you in your situation. Different lenders offer different things. So, different down payment assistance programs, for an example. Different lenders have different options in that realm, or some will do cash out refinances for a bigger dollar figure than others will. So there's just a lot of different options that we have as a broker, and we're not really tied to one underwriting department or one closing department or anything. We can really tailor the situation to exactly what you need.
Yeah. And for those of you just watching, I see a few people already watching. Jake is going to be one of those lenders too that is actually going to talk to you on the phone. He's not just going to send you that application link. He's also going to talk to you about what your goals are, what maybe your unique situations are, and really take advantage of all the different products that he can hunt down for you.
Yep.
I always talk to people when they're asking me about what lender to go with. I talk to them about what exactly do you want? Like, do you want customer service? Do you want communication? Or is it literally, Thomas, find me the best rate? Which not, if you're trying to just compare rates to rates, that might not necessarily be the best deal if you just pick the lowest number. We could talk about that on another episode.
Mm-hmm.
But it's not just as simple as that rate that they have advertised on their website. I will tell you that. But just know that if you reach out to someone like Jake, you're going to actually get a conversation, and it might get you into a loan product that a lot of other lenders don't even have access to or wouldn't even suggest because they're not taking the time to really get an idea of what you're looking for.
100%. Thank you.
Yeah. So we are, after you talking to me about why you wanted to be on, you talked about a few different topics that were interesting to you, and I haven't done a video like this or even a social media post like this in a really, really long time. And I think it is a very relevant conversation because all I see on the national news lately is renting versus buying and how it is just really dumb to buy right now. So I think this is an interesting topic. We're going to talk about renting versus buying in general. And I think to start off the conversation, I want to point out to people watching, obviously we have a real estate agent and a lender on this stream. So we are biased because this is what we do for our jobs.
Yep.
But I will say, I think I'm going to be as fair as possible. And during this video, I'm going to talk about situations where I actually don't think you should buy. But I think we should start it out with, Jake, do you want to talk about the first home you bought? And what was kind of that last big thing that made buying make sense for you?
Yeah, and it's funny that you say that we are a little biased, but that's what I think makes us unique is we're also honest. So when I bought my first house, I was 20 years old. I had never rented. I always lived at home, and I went right into buying. And I've actually used this example for a lot of people that I've spoken to. When I bought, I did not understand what all went into buying a house. I thought that it was just almost like buying a car. You make the payments, and that's kind of the end of it. Nobody told me at 20 years old that you had to keep a lawnmower running or that you had to keep appliances going and you had to keep all of these things that can be unexpected expenses. So it is, for most people, it does make sense to buy. But there are cases out there where I have told people, like, hey, maybe rent for a year, fix your credit, or get a little bit more secure in your job to where you're going to be comfortable for when those unexpected expenses come up. I always tell people that I'm going to give you my best advice, but ultimately it's your decision, and I'm going to help you do whatever you choose to do. So the reason that I bought a option to buy a home relatively cheap in our hometown. I'm also from Norwalk, same as you. And my dad owned a house and was getting ready to get married. And he had put some work into the house, so I didn't get a deal, but I got first right of refusal, we'll say, on it. And when I bought, I think it was 2016 when I bought my first house. When I bought, rent at like duplexes and stuff that I was looking at was somewhere around 1,100 to 1,200 a month. And my first mortgage payment there in Norwalk was less than $800 when I first bought. So
What year was that?
it was 2016.
Okay. So rates weren't even that great then in
Nope.
2016.
I think I started out with like a 4.8.
Yeah.
And I had to go FHA, which there's a lot of people kind of shy away from the government programs, but it fit what I needed at the time. Lower down payment and things of that nature, but it made sense until it didn't. And there was definitely some struggles, while people were in college and stuff. I'm assuming that everybody kind of went through their ramen noodle stage, but there was definitely some of that. But the payoff at the end was my house actually gained value by me just keeping it the way that it was. And I was able to take that value and use that as a down payment on my dream house that my wife and I had found. So gave us some security and also some unexpected money that we didn't even really, you didn't put it in. It
So
just
you
kind
took
of
a
made
lot of
sense.
that. You took a lot of that equity to end up kind of stair stepping up to
Yep.
the home that you're in now. Yeah,
100%.
and I think that's a really good scenario that I try to talk to as many people about as possible, because one of my fears with the first time homebuyers that I meet slash hear about a lot is I think there's a fear of buying like what you would call like a starter home
Yep.
nowadays. I feel like a lot of people want to just wait and try to save up whatever that minimum down payment it is for a home that I would consider more of like that second or third home as opposed to that first fixer upper. And I feel like it's so much easier to get into that, whatever your more of your forever home is, if you get into that fixer upper that might not be perfect, and kind of build equity through that. So
Yeah. And what I always tell people when they're looking for their forever home is that's kind of a moving goalpost, right? So your forever home year over year is just getting more expensive, and it's getting harder to obtain as you're trying to, kind of chase that goal. So what I always tell people is even if it's not the perfect house, if it's the right time, you can always make it yours and make it better. And if you make things better in the real estate market as a whole, you're never going to lose out on that money. That
yeah,
money is actually going to come back to you, sometimes even tenfold.
yeah, yeah. So I'll talk really quickly about my situation that made me buy my first house. Kind of similar, honestly. I bought my first house right out of college, and there was just before I get into this, I want to acknowledge that I'm very, very blessed to be in the position that I was in here. There was a lot of things that stacked up to make it make sense for me to buy a house right out of college. Unfortunately, but fortunately, my grandfather passed away like right around 2013 and left me a good amount of cash. So I had a down payment available, and I had a down payment enough just from that to get 20% in the market that I was looking in, which was like Cedar Falls, Waterloo at the time. And to top that off, I had people that I knew were living in the area after we graduated that I knew would pay me rent. So just a perfect storm of situations. It's either move in with these potential roommates at an apartment where we're splitting rent and neither of us really get money back, or save my roommate money and make money at the same time renting out one of my rooms in my house to him.
Yep.
And it just made a ton of sense. I basically did that until I moved away from Waterloo, and it ended up paying down a good amount of my equity that I didn't lose my shirt when I sold that house. And I sold that house way too quick timeline wise, and it just didn't really make sense. But because I was renting it out and I had so much down, it didn't hurt me cash wise. And I did the same thing when I bought in West Des Moines as well. I had a roommate that moved in with me, and he helped pay my house payment, and he paid a really, really fair rent for himself. So it all just kind of stuck together perfectly. And
Yep.
honestly, if I didn't have those two things line up perfectly, it probably would have been a little bit longer before I bought a house. But sometimes when you analyze all this stuff, it just can make so much sense. So we are going to get into. I posted this morning asking people what made you make that decision to buy your first house, and we're just going to run through them. And there might be a few comments that start a discussion. Otherwise, we're just going to read them and talk about whether we agree with the pros that they point out, or maybe add a few more details into the pros that they point out. So we got Kyle Hoskinson, actually a client of mine. He just closed on his place earlier this year. And the biggest thing that made him decide to buy was security for his family. A place you're renting can get sold, or you can choose not to renew a lease. They could choose not to renew your lease as well, too. And the lack of control is a stability issue when raising a child. You also don't get to decide the quality of any repairs or appliances that are done, which can also affect the quality of your life. So
And
I
you have to ask permission before you can do things like if you want to replant the grass because there's too much mud and your kids are in it.
yeah.
You kind of have to ask permission or forgiveness, whatever your situation is. But
Well, and even too, like there's some places that you can rent that they have limits on how many people can live in the place.
mhm.
So once you have a kid, all of a sudden you have kid number two. Maybe they don't even want you to have that big of a family in the place that you're renting, even if you think you can make it work. Um, you're not going to get any improvements done on the rental that you're doing, so you probably would have to find a new rental. Um, this one, the quality of repairs comes up a ton here. We can go to the next one, but the stability issue is definitely a pro that I've heard a lot of people point out. I mean, if you buy a house, the only one kicking you out is the bank, and all you have to do for that not to happen is just pay your monthly mortgage payment.
Yep.
So this is kind of more of a unique perspective because this person bought a house back in 1985, I believe. It was his first house. So this is
You
my
want to talk
dad.
about rough rates.
Yeah, rough rates, but the home prices were a lot better. Um,
Yep.
he was in a situation that he thought buying was basically the only option. When he grew up, it was basically programmed as what you do growing up. Renting wasn't even a consideration after you got married, and raising a family in a home was a far better option as a rental. I don't know if we have any real insights on that, but I can tell you for sure once I see a couple I know have their first kid, that's when they really start thinking about buying a house. So,
Yes. Yeah. I think that it is programmed into society a little bit, but I think that that's starting to break through the generations. It's all in what people want. If you want to do a whole lot of traveling, maybe buying a home doesn't make sense, but or if you're not in your forever situation. But I definitely think that there is a little bit of programming that goes into it.
Yeah. Do you think that that programming still exists today? Do you think that there's tons of people our age that have grown up assuming that you're just supposed to buy a house?
Yeah, I think that the ones, I think that there's many different reasons why. So, as people's eyes have opened to the possibility of being able to rent, even rent a townhome that could be brand new, uh, I think that uh, being not ready is more acceptable in today's society
Yeah.
than it was in the 80s. If you
Or
weren't ready in the 80s, people just assumed that you weren't responsible.
or graduating and deciding to live in your mom's basement for a little bit. I feel like
Yep.
that's much more accepted. Okay. We got a long one here from Tyler Thompson, another Norwalk grad. So this is good for us. He's piggybacking off of what my dad said. He said it was a norm to being on the journey of success. And you were just programmed to start house hunting after your marriage or after college. And he liked the idea of building equity, which I think if anyone's looked into it, I feel like that's really, really appealing. He said, however, I do think now with interest rates that have gotten high, he put that in quotes because historically they're not that high.
Hmm.
And with a lot more residential homes becoming owned by large scale rental investors, he does see that there's a little bit more of a risk than there is a reward buying a home now compared to it was back when he bought a house. And then he also just gets into a conversation that he's had with his brother-in-law a lot about renting versus owning and the pros and cons of each, which we will get into more. But he kind of starts talking about. Um, I've been thinking about this a lot lately. When you are looking at your decision that you're going to rent and never own, it really, really reminds me of the conversation of getting term life insurance versus whole life insurance.
Hmm.
Because a lot of people will say get term life insurance and then invest the difference of your savings. The problem is when you're looking at renting versus owning and you want to invest the difference on the money that you're saving and renting, Jake, you know a lot of people. How likely do you think it is that people are actually going to stay that disciplined and invest the difference that they're saving with the renting versus owning?
I can tell you from personal experience, I wouldn't be investing it. I'd be spending it, which, uh, especially in today's world that we live in, things are expensive. So, I just had a talk with a client yesterday, and he said that whenever he's got money in his pocket, whether he's buying things that are useful or not useful, it kind of just sits there and burns. So, I think that there's definitely, uh, if you're disciplined, there's a way to look at it that way, but also you can do that same thing and still own a house, and you're
Mhm.
building, money that you don't even see. It's almost like money coming out of your check and you never even realizing it into a 401k. Same thing could be said about buying a house. Uh, and I also like how, Tyler added in the fixing things yourself. Uh,
Mhm.
Nobody's asking you to be, looking into everything and knowing how to do everything yourself. There's definitely going to be some things owning a house, plumbing being a huge one, or electrical that you may have to pay somebody to fix. But long term, it's going to pay off for itself. Uh, Getting that electrical panel that you can't figure out how to do it, getting it replaced is definitely going to be a short term cost. But in the long term, it makes your home more valuable because you are changing things to add value. So, um,
Even the projects like you're pointing out there, like if you ever get in a situation where you need to replace your roof or replace the electrical panel, you might not see a direct one for one return, but I can tell you for sure if I show someone a house and the electric is updated, that's a really, really big plus.
yep.
If the roof is 10 years or younger, that's a really, really big plus. All of those things help you sell your house so much quicker. And that's just talking about projects that are more so home maintenance than it is talking about improvements.
Yep. And on my side, insurance agents that are sending me declaration pages and stuff, they always ask for the age of the roof. And if it's less than 10 years, which is a huge selling point, they get a huge savings on their yearly premium.
Yeah.
So if a house has a roof that's 30 years old, that insurance is going to be a lot more expensive than one that has has been done within the last 5 years.
Well, and some insurance companies won't even insure you.
Yep.
Like they'll just straight up decline a house that has that old of a roof.
So what you're saying, when it's a selling point, if I can, if I'm working through a loan and working through multiple properties with somebody as they're pre-approved and they're shopping, if the homeowner's insurance goes from $250 a month to $150 a month, and that's $100 worth of savings, if you have two houses side by side that are the same house, that one with the newer roof is going to sell faster just based on that $100 a month savings.
Right. Yeah, for sure. Do you agree with what he says that maybe someone that's not as handy shouldn't look at buying a house?
I do and I don't. I mean, if you have zero idea on how to do anything and zero willingness to figure out how to do things, YouTube is a extremely powerful tool.
I was just about to say the same exact thing.
So you can find out how to do almost anything on YouTube. God bless my wife. She is awesome, but she redid our floors while she was pregnant because I just didn't have time to do it. And she wanted it done. And all she did was watch YouTube videos and ask me whenever she had questions. So I think if you have the willingness to learn on doing things, you can still do it. But you also have to know when you're out of your depth and when you should get a professional involved. And I think that's what another thing that makes you and I different. If somebody called you and you sold them a house 3 years ago and they said, hey, I need a plumbing contractor because this is not going well, we'll give you recommendations or, be your support system if you can't find that support system in those ways. So I think that goes a long way in who you choose to do business in real estate with.
Yeah.
It's not transactional for us. It's a life.
Speaking of home improvement projects and flooring, if you need someone to install a hard surface flooring, Zach Miller, who commented saying hi,
hey, what's up, Zach?
Flooring. So he would be a great option of someone to reach out to. Zach Miller with 4G Installation.
Awesome.
And he's the next comment. He commented saying, I decided to buy was to start building equity, which is becoming a common answer here. And he had bad experiences when renting, very similar to what Kyle said. Just not being happy with the repairs that they did, or they were so unresponsive that he ended up just having to do the repairs that himself. And he really, really liked the idea because he's handy and he knows how to do a lot of these projects. Finding a house that he could put sweat equity in. I can tell you, I'm not going to tell you where Zach's house is, but I'm going to tell you the house that he purchased, he made so much more valuable by the stuff that he did. He installed a lot of new LVP. He repainted a lot. He switched out light fixtures. He switched out hardware, did bathroom remodels. The house is easily he added $20,000 or $30,000 worth of value on the improvements that he did all by himself. So I would definitely say if you are someone that is handy, it should become even more appealing for you to purchase a house. But I can tell you, other than doing small projects, I can't do anything. And I have been able to maintain the house that I live in, and it is totally fine. And it has not been a stress financially or lifestyle wise. So,
and even, I have a construction background from before I got into the mortgage industry. I ran my father's heating and cooling company, so I know how to do things. And my grandpa owned a plumbing company for 40 years. So I may know more than your average bear, but believe it or not, I spend quite a bit of time on YouTube doing home improvement stuff. Or, I want to frame in a window. Just because I am handy doesn't mean that I have all of the knowledge just kind of hanging around up here. Right. I still have to do that research. And, there's construction companies out there that still have to do that research. They just have the willingness to do it. And
I think the positive and the negative about houses is all of them are so unique. So
Yep.
even if you've installed a new window before, there might be a different situation on this window that you need to do some Googling and figure out. Also,
Yep.
I think I forgot to mention this with Tyler's comment too. The tools thing that he mentioned, obviously, it's way, way nicer to have your own tools to work on houses. But there are plenty of resources out there through hardware stores or big box stores where you can rent basically any tool that you would need
Yep.
to. So that stuff is always out there to you if you don't want to spend the thousands of dollars um, buying that stuff too. So there's definitely options out there if you want to try doing some of the home improvement stuff yourself. This was a simple one. We had Maggie that commented saying just having that freedom, which I think kind of leans into what a lot of people were talking about too. I mean, Zach mentioned putting sweat equity in there. That's also the freedom to do the improvements of the place that you're living that you want to do and actually get value out of it. So,
Yeah, and get it done in a timely manner. I mean, um, we've all heard horror stories about air conditioners that went out, or a fuse blew or something, and the landlord didn't get to it for a week, and somebody had to come out on a Saturday and fix it, and they just barely fixed it, kind of a deal. So I think along with the freedom of doing the improvements and stuff, it's also the freedom to make it yours.
yeah.
Go ahead and paint that wall with the chalkboard paint and let your kids draw all over it. It's yours. You don't have to ask for those things.
Yeah. Yeah. Well, you don't even have to like. I always laugh when I see this poll, but National Association of Realtors does a poll every year where they ask buyers, "What was your biggest motivation for buying a house?" And one of the most common answers is, "I have a dog, and I wanted my dog to have a house to live in instead of an apartment." But the freedom to get that house, get that fenced in yard, there's not very many apartments or even single family rentals that you can find that will let you have a dog or won't charge you money to have a dog. And being able to just do stuff like that is it's a great freedom. We all love
Yeah.
our dogs.
Too much sometimes, but
Too much. Okay, so we already went through a lot of these, but I got kind of the pros of renting and the pros of buying and the cons of renting and the cons of buying. And we talked about a lot of these too. The I'm gonna pop up Landon's comment too once I'm done running through these. But I don't think we didn't really get anyone commenting on but why they're renting or why they have continued to rent. So I want to highlight that because I do think that there are reasons to continue to rent. Um, I think the biggest one is the one right on top here is the flexibility to move. It is so much easier. Worst case scenario, if you need to move out of Norwalk and go to a different city tomorrow, the biggest hit that you get is just whatever it costs to cancel your lease early. Whereas if you are leaving the home you own and you don't have a situation where maybe you can rent it out to someone that you trust, you have to sell the home. And selling your home can take, I mean, median days on market in a lot of towns right now, towns and cities, is 20, 25 days ish. And that's just to get it under contract. And then you're talking about waiting another 30 to 40 days for it to close. So it's going
yep.
to take 2 months to sell your place and get your proceeds out of it. And there's all the stress of getting your house ready to list while you're moving cities. So I think the flexibility is a really, really big pro when you're talking about renting versus buying a house. Would you agree with that?
Yeah, I would. Not all of us have our feet kind of firmly planted in, wherever we forever want to be. So it gives you a lot of flexibility, and options. It sometimes makes you not say no if your company wants to move you to Florida for 6 months. So,
Yeah. Lower upfront costs is a big one. I mean, all you're doing when you're renting is paying the security deposit,
mhm.
which at max is normally 1 month's payment for rent. Whereas if you're purchasing a home, there's your closing costs and your down payment. I mean, you could talk about down payment really quick, and you could talk about closing costs. If someone were buying a $350,000 home, they don't have access to a USDA loan or a VA loan. What are they looking at for minimum down payment, and what would their closing costs? Kind of. So we're not
That
going to write this down and quote you on
right.
it.
That kind of just goes into credit and income mostly. Because there is options. Even if you're a first-time home buyer, it's 3% down conventional all the time. You always have access to that. So if you're at 350,000, you're talking about what 10,500 if I'm doing that math correctly for down payment, and then you have your closing costs, which on the loan side are not that expensive. Usually, you have about $2,000 worth of loan costs. But the things that nobody actually takes into account is your prepaids. So setting up your escrow account, that way you can get property taxes and insurance paid, and paying your first years of insurance costs and things of that nature. So the numbers can get kind of expensive, but the pro of working with real estate agents and lenders that kind of work together and are good at communicating is we can kind of talk about those things and make it more beneficial for you in the long run. So I think that when you're really weighing out your options, whether you're renting or going to buy, I think that working with a lender and an agent at the same time and getting a solid pre-approval to really weigh out what your options may be would be really beneficial. Because one of the things that I wish I would have done, and I don't know if you wish you would have done when you bought your first house, but my first house has actually doubled in value since 2016 to now. And I wish that I would have kept it for a rental property. I really wish that I would have given myself that financial freedom to be able to do that, which a lot of people don't think is an option, but it may be, if you do need to move. So, it can get quite expensive. There's different FHA programs that are at a 3.5% minimum down payment all of the time, and things of that nature. So really, it's just sitting down with somebody that actually cares about your situation and isn't trying to sway you in any direction.
Yeah. Yeah. On the rental conversation, it's kind of funny you bring that up because the house I am currently in, I know that I am probably not going to be living here in 2 years. And the biggest thing that's having me not sell it and move tomorrow is the idea that I think I want to have this be a rental, and it's figuring out financially how I can pull that off. So that's kind of what's holding me back of selling this place. Because like you said, it's just in central Iowa, it's pretty simple math. We'll get into it a little bit here, but for the most part, in central Iowa, homes appreciate in value. They go up in value if you look at it on a long-term scale. Even the periods that we've had in the history of central Iowa home prices where it has gone down, it has not gone down that much compared to the U.S. as a whole.
And it's momentary. It's like a blip.
Yeah. Even you would be shocked, and maybe I'll do a video about this sometimes. If you go back and look at 07, 08, 09, 2010, you would be shocked comparing what actually happened in central Iowa compared to what the national news headlines said. And I'm not saying it wasn't bad. It was a housing crisis. We went into a recession, but in central Iowa, it was not as bad as it was on the U.S. as a whole. So,
yeah. And that, I will say that, especially our generation, if you were affected by that, we know people that our parents were affected by that and things of that nature. So you may be scared of buying. After that housing crash, there is so many more rules and regulations that go into mortgage sales and lending as a whole that are meant to protect you. I mean, nobody wants to come take your house because the bank doesn't want to have to deal with it.
Right.
So as much as we ask you to do up front, everything is really there to protect you. Do you want to pay $600 to $700 for an appraisal? Probably not. But if it comes in at $20,000 less than you're buying the house for, you kind of want to know that.
Right.
So those things are there to protect you, and we are here to protect you.
It's there to protect the market in general too, because
Yep.
what they were doing a lot in the early 2000s were what they called ninja loans, and they're no income, no assets, nothing was verified. They were basically just taking people's word for it. And because money was so easy to get lent to you, it artificially inflated the prices of houses.
Yep.
Um, and now that's just not happening as easily. I mean, we did just have a situation from 2020 to 2023 where interest rates were so stupid low that it increased the price of homes because it was so tempting to buy a home. But that's not artificially increasing the prices of homes. That's just simple economics. Like, so
It was forcing economics to move, is really
yeah,
what it was doing.
yeah,
To move more money through the marketplace, because we couldn't spend any money in the marketplace because everything was shut down.
yeah,
So, and I will say that, rates went down, and rate is an extremely important part of the puzzle, but it's also not the only part of the puzzle.
yeah,
So as you kind of look into that, with the varying ways that we can mess with rates, or, buy it down or do temporary buy downs or things of that nature, which we could have a whole nother segment on. Uh, but actually going through all of those options, and then especially with the refinance options as rates continue to drop, uh, it's really worth having those conversations.
yeah. We got some interesting comments that I want to talk about really quick because I think one of these leans directly into kind of the pros and cons that we're talking about right near now. Landon commented saying, to relieve the fear of having big repairs that are costly, would you recommend a home warranty program to eliminate some of the fear for home buyers that are not as handy to avoid large repair costs? And I will hop in here and say, for first time home buyers, one of the concessions I try to get a seller to pay for a lot of the times is for them to pay for the first year of a home warranty. Because I know with a lot of first time home buyers, that 3.5%, that 5% down payment that they're putting down is a good amount of their reserves. So if in the hypothetical situation, the HVAC immediately has an issue, or even if like a small, what some people would consider a smaller thing, like the fridge breaks or the dishwasher breaks or water heater craps out, if that breaks within the first few months of you moving into the house and you had this big cash to closing check, that is a tough situation to put yourself into. And the home warranties, for those of you that don't know, basically covers all of those appliances on the property. And it's not a complete replacement plan, but it is a very, very good supplement plan. A lot of them have caps on how much cash you're going to pay out of pocket, and then they basically contribute the rest of that repair that happens. And Zach, who was also watching, immediately commented, um, when they bought their house, they had to replace the AC and furnace within the first year, and it definitely helped soften the blow. I know with their situation, I think they ended up getting $3,000 from the home warranty company to help replace their HVAC right away. Have you had any experiences with people getting home warranties?
Yeah. So I always recommend that people at least look into it. Uh, we all are kind of guilty of not reading the fine print sometimes and kind of believing what people tell us. So I would definitely say, for when you're looking at it, definitely read through everything that they're going to cover, because the worst thing that can happen is you be, overextended for a short amount of time after you close on your house. Something happened, you think you're protected and you're not. So really see, like I've used mine. We talked about it in our last meeting, but I actually had to go without a refrigerator in my first house for several months because it went out. and I worked with the home warranty company, and we eventually got it rectified. But they have a process that they have to go through, and sometimes it's not exactly what you thought it was. So just kind of read through those things, but they are there to help you. Like if some kind of a big repair comes up, they're going to cover, as at least what was in the writing. So I had to get a water heater replaced in my home that I currently live in, and it was $125 to have a tech come out. And then they decided they couldn't fix it, and the rest of the replacement was totally free.
Yeah.
So I basically got a new water heater for $125, which
Yeah. And like you're talking about with reading the fine print, the thing to know with those home warranty companies, and I'm not saying this to bash on them, I'm just saying like this is how they make money, is they want to repair the items that they're warrantying.
Mhm.
They do not want to full blown replace them. So that is the thing to know. Like you will get that for a year. And a lot of times it like with Zach's situation, I made sure the sellers paid for that home warranty because we knew that the furnace was old and we knew the AC was old. And the company that we went with tried to repair it at first, and we just basically proved to them that it just wasn't possible, and we had to buy a new one. So you will sometimes get some pushback, but it is definitely, especially if you can get it as a seller's concession, it is something to look into.
And you have the option to extend that most of the time.
Yep, and that's what I was just gonna say. The rates that they will offer you at purchase. The company that I work with mostly, who I have a really good relationship with their rep, the rates that they offer you at purchase are lower than what you would just go online and find. But if you get that policy, and when a year is up, you can extend it for that same price or whatever their purchase price is at that time. Sometimes they do change it year to year, but you will still continue to get that discounted rate as opposed to someone that buys a house and then a month later decides they want to buy a home warranty.
Yeah, that sounds awesome. It's like buying an extended warranty at the dealership or kind of researching it on your own and buying your own extended warranty.
Right. Yeah.
Just kind of go through all of those, pros and cons on whichever one you decide to go with, and just make sure that you're informed. I mean, that's the big thing. And that's 2008, and that whole crash of the economy was terrible for the United States as a whole. And I don't want to discount it, but I love that information came to light, and it was the consumers were not informed enough when they were making decisions. And now there is several laws and several acts in place that to inform you of all of these things. So much so that sometimes they're a pain in the butt when you're signing things 60 times. But
yeah. We got another question from Zach too that I think you're well equipped to answer. Is it a waste of time for lenders to come in with the lender and sit down and see what the numbers would be, even if you're looking to buy in a few years, not just like tomorrow, just to get an idea of what?
Absolutely not. That is perfect, actually. I want people to do that because the sooner I know your goals, the sooner I can help you to get there. And you may set a goal for yourself that in 5 years, I want to do this and move into this. I may know of some tips and tricks or some things, different loan programs or things of that nature that we can get you there even faster because you don't have to save up as much money or you don't have to change your lifestyle to do those things. So it is not in any lender that tells you that it's a waste of their time or kind of refuses that meeting. Just go ahead and give me a call because that is what I want to do. I want people to get to where they want to get to as fast as possible. Because ultimately you have no control over your life. Sometimes you're here for a good time and not a long time. And sometimes you're here for the long haul. We could all have something happen tomorrow that changes our lives completely. So sometimes your 5-year plan, you push into a 10-year plan, and then you push into a 15-year plan. And I don't want to see people do that. I want to see people succeed and get to where they want to get to. So if you want to sit down and say, hey, at current market, what would a home like this be on a monthly scale, on a yearly scale, or In 5 years, I want to own 3 investment properties. How do I get there? We can have all of those conversations. And even if it doesn't go anywhere for 2 or 3 years, we are still communicating the entire time,
Yeah.
and you have a resource.
Well, and also you have someone that has a really good idea of what you're looking to do. So, and I kind of hate doing this because I don't think you should decide to purchase based off of this. But like, if there's an opportunity that comes up because interest rates have dropped, where it's like, oh, it all of a sudden makes so much more sense for Zach, you need to know that to reach out to him to tell him that. Like,
Yep.
So the other thing I would point out that kind of goes along with this too, one of my favorite things to do is to give people an idea of how much the value of their home is. So if for whatever reason you are curious, do not be afraid to reach out to me and say, hey, Thomas, if we were to list next week, what do you think my home is worth right now? This is how much we owe. How much would we make? And I could give you that number anytime. It's just simple as talking to me about what you guys have done since you purchased the place and how much you owe, and then I can run the numbers and give you an estimate from there. The only caveat that I will give is the markets do shift, so that number might change from time to time, and it might just totally depend on when you decide to list as well. But that is definitely something that is not a waste of my time. Even if you're in a situation where you just want to know, I'm sure, Jake, you probably had the situation come up, but people trying to get rid of PMI.
Yep.
And you want to know if it's a waste of time to reach out to the lender and say, hey, I think I'm at 20% equity. I want to have an appraiser come out and look at it. I could give you a rough estimate of what I think the appraiser is going to say. I am not an appraiser, but I can tell you I can get the number pretty close. When they came out to my house, because I had to do an appraisal, I got the number within $3,000 of what they ended up saying. So
Yep.
I can get pretty close.
Yeah, and dropping PMI is a great segue there, because you are building equity by just owning the house at a certain rate, and it may drop or go up year to year. But just because you haven't made 20% of your mortgage payments doesn't mean you don't have 20% equity. Mm-hmm. So, and I've seen some, PMIs that are really expensive. So even if you refinance and your rate, let's just say you have a 3% rate from COVID, and now you're looking at going to a 5 or a 5.5 or a 6 or whatever it stacks up to be, it may still make sense financially, because if you can drop that PMI, the payments still might be lower, even at a higher interest rate. And with that, you also don't have to reset your terms. So you can do flexible years. If you lived there for 3 years and you don't want to reset, you want to do a 27-year mortgage, let's get it done.
Yeah. The other thing I will say that I just recently saw online too, talking about building equity, the person was a pro renter, is what I like to call them. And they said, yeah, your equity is great, but what are you going to do with it? You can't do anything with that money until you sell. And that is just not true. Like I'm not going to recommend this to everyone. But if you are ever in a situation where you're racking up a lot of credit card debt, and you have a lot of equity in your house, a HELOC is 10 times better than having a credit card debt.
Yep.
The interest rates are just a little better.
And they're fixed.
Yeah. So
you have fixed rate options, and then you have adjustable rate options. And also that's a great point, because HELOCs are very underutilized as revolving credit. So you have access. It's like a savings account that you make really hard for yourself to get into. You can have access to it. It's just going to suck to do it. And that's why most people don't. I've had people take out HELOCs to buy cars, or I've had people do a cash out refinance, and they're like, I don't want to have a car payment that's $1,000 a month. I'd rather just go to the dealership and pay cash for it, and then just build it into my mortgage payment.
How did, when the person that took out the HELOC to buy a car, how did the rates compare between a car loan and a HELOC?
It was a different way of looking at it. The rates were a little higher on the HELOC, but you also are just basically paying yourself back. So most HELOCs have a draw period where as you're paying off that money, you always have access to it until that draw period is over.
Yeah.
So, like if you have a 10-year draw period on a HELOC, and let's say you put that same $1,000 a month car payment into that HELOC, that money is there for you if you ever were to get into a sticky situation. So let's say the HVAC goes out. Now you have instantaneous liquid cash that you can pull out from your equity.
Yeah.
As long as you're disciplined and you pay off that loan just like it was a car loan.
Yeah.
But it also keeps your minimum monthly payment a lot lower, to where if you have a lean month or something came up, um, you don't have to make $1,000 a month payment. It may only be a $200 a month minimum payment. So it's definitely, you can use equity in a multitude of ways, or a cash out refinance, or however that kind of shakes out. It's always worth a conversation. Any conversation that I have, and I know that Thomas thinks the same way, any conversation I have with anybody is never a waste of my time.
Yeah.
Even if it never goes anywhere, say somebody wanted to, buy an investment property and then they totally backed out of it. I learned something and they learned something, and we now have a connection that makes it easier for the next time that they want to do something financially. So it's never a bad idea to reach out.
All right. Let's do one last thing. I know I'm taking up way longer than I told you we would, but
You're good.
we're having a good conversation. Let's do some dorky number stuff really quick to kind of highlight where home buying starts to win versus renting. And this kind of focuses back on the big question that I always ask people that are thinking about buying their first home. And the biggest qualifier I think I ask people is, how confident are you that you're going to be wanting to live in this city or town for the next 5 or 10 years minimum? Because I think at minimum, you're going to want to live in that house for 5 years, in my opinion, just to kind of assure yourself that the appreciation is going to work out. You're going to have enough equity in the house that selling is not going to be frustrating. And it's going to really, really put you in a situation. But this is what I did. I compared the median house in West Des Moines versus the median rent, and I went and did some fun math to kind of compare what it would look like 10 years later if you were to just rent versus if you were to buy and live in a house. So the median purchase price in West Des Moines for a single family home right now is $350,000. I assumed a 5% down payment. I assumed a 6.5% interest rate, which is kind of high right now.
Yep.
Correct? Okay. So I'm just pointing out here that I even did high numbers on these estimates. So I did 4,600 in taxes, and I also had to estimate that taxes are going to increase 1% every year, which I can tell you they're going to increase when you're living there for 10 years. I don't think they're going to increase 1% every year.
Probably not on an average, but there might be a year it jumps 3% and it really makes you angry, and then it doesn't change again for 3 or 5 years. So yeah, it's pretty good, pretty close.
Insurance, I did 1% of the purchase price, and I also have that increasing every year. And then for maintenance, I might have went low on this, but I think it's going to end up averaging out about right if you look at it throughout 10 years. But I did $5,000 a year for maintenance, which might be a little bit low, but that's probably the only one that I estimated low. And then I estimated 3% appreciation every year, which in central Iowa, worst case scenario, it's probably going to be you're averaging out to 2 every year. But in most cases, people hit this number pretty easily, 3% appreciation every year.
Yep.
So, and then rent, I assumed you were paying $1,500 a month in rent, and I assumed that that's going to increase 1% every single year, which might be low for rent. I think rent increases more than 1% every single year, but that's just what I did. So in this situation that you buy a house and live in it for 10 years, you have built $227,000 in equity. And your total costs between your down payment and your monthly payments was $365. So if you do the quick math there, your total cost, quote unquote, is $128.
Yeah.
Yeah. Whereas if you rent and you're not building any equity, you're paying $1,500 a month, and the rent increases 1% over year. Over 10 years, you're paying over 100. You're paying $197,000 in rent in 10 years.
Which
This,
is
I mean,
it,
that's
it,
just the math. Like,
yeah, it's crazy how that math works out too. Because when you're paying rent, let's say you're paying $1,500 a month, you're not realizing that in 10 years you're going to have spent almost $200,000.
yeah,
The same thing when you own a house. But the big thing that's standing out to me is like that 17,500 is a down payment.
yeah,
Uh, that number alone will scare a ton of people. But
yeah,
if you see that your home is growing by a 3% every year, that also means that your down payment is growing,
yeah,
right? So let's just say you spent 17,500 today on an investment account or a 401k account. You open that up for yourself and you look at that in 10 years and now it's worth, let's say 50,000, you're going to be extremely happy.
yeah. Well,
Same
and
thing
to
happens.
top that off, like the just from the investment aspect of that, you're going to be pretty happy. But we all have to have somewhere to live, you know.
Mhm.
So you're paying money to live somewhere, no matter what, unless you're going back to what I talked about earlier. And you're living in mom's basement. Um, but you're paying somewhere to live, and to pay to live in a home where you can do all the pros that we've talked about this whole episode. You can do what you want with it. You can have as many dogs as you want. Your kids are in a more secure situation because you own a home and you're not renting. Your landlord's not going to kick you out. Your landlord's not going to decide to sell the property. There's not all this uncertainty. There's so much more certainty. Speaking of the certainty, your most cases people are getting a fixed rate mortgage right now.
Yep.
So your loan and your rate is fixed. The only thing that's variable is insurance and taxes.
Which, depending on your financial scenario, you may be able to not even have those included.
Yeah.
There's a lot of options that you can pay that out of pocket if you would like.
Yeah.
Um,
Yeah.
I
So it doesn't factor into your monthly costs, is what you're saying.
Yep. So I've heard all the arguments against and for. Um, I'm always for that escrow account because it's kind of like a something you don't see, right? You pay a minimal monthly amount, and then when that $4,000 check comes out for property taxes, you don't see it.
Yeah.
Whereas, property taxes are due in March and September here in Iowa, and the property tax guy is going to be looking for you if you don't have that $4,000. He's not going to be like, "Oh yeah, let's save that up for the next month because we forgot." um, so if you are very strong financially, waiving those escrows may be an awesome plan for you. Uh,
Yeah. It's
but
kind of the same situation that like we talked about with the whole life versus term.
yep,
Save on that monthly payment, invest the difference, and then hope that you can outpace that bill that you have coming. Because insurance is, they mostly bill every 6 months as well, too, don't they? Or is insurance billed yearly?
insurance is usually billed yearly.
Okay. So
So
you have three big paychecks, and you just have to hope that you can invest the difference and outpace what your escrow payment is, too.
yep.
Because that's what the bank is doing with your escrow. They're lending it out to other people, and they're making money on your money, and
Mhm.
they're outpacing the check that they're going to have to pay on your behalf for taxes and insurance. That's exactly what they're doing. So if you want to be that disciplined financial person and try to do that yourself, you're more than welcome to, and you might be able to get away with it in the long run.
100%.
So, yeah. So it is definitely something to think about. But with this chart, the one disclaimer I will give is if you do the same thing, but it's 3 years, 4 years, renting looks better.
Yep. Or
Because
on a 2-year scale, especially.
right, yeah, it's the down payment, like you said, is a big number. And putting that much into a house that you're then going to try to sell in 2 or 3 years, you there's not enough time to build that appreciation. There's not enough time to pay down that equity. Um, when you close on the house, your closing documents most likely will have a amortization schedule, um, where you can literally see every single payment that you're going to make on that 30-year mortgage or whatever the mortgage is. And you will notice, as you're getting farther on to the life of the loan, your monthly payment is paying down a lot more principal than it was your first monthly payment.
Mm-hmm.
And that's just the way interest works. That's the way loans work. The longer you live in the house, the faster you're paying down that principal. So,
Yep. And remember, you don't have to just make that monthly payment. You can always tell whoever your loan servicer is that, hey, it's tax time right now, right? So if you want to throw all of your tax refund onto the principal of your house, you can do that. You can make principal payments that, you have to be a little careful, because sometimes when you call and you say, hey, I want to make an extra payment, they'll just count it as next month's payment. You always want to stipulate that, hey, I want to make a principal payment to my mortgage loan. And then if you do that, you can pay it down way faster. So it's the old adage that we all got taught when we did credit cards. Don't make the minimum payment, make, twice the minimum payment. You're going to pay it down extremely faster. Same thing with a mortgage. You may have a 30-year mortgage, but if you pay an extra $200-$300 a month, it may cut that down to like 15 years and it's paid off.
Yeah. And back to the very first part of this episode, one of the other things that I did, which thank God younger Thomas was smart, when both the situations where I was renting out a room to one of my roommates, their monthly rent that they paid me paid extra principal.
Okay.
So I paid the monthly payment out of my money, and then the rent that they paid me went towards principal.
That's an excellent way to look at it. And then, when you bought your second house, that down payment number didn't scare you near as much, because you had more equity in your house, and your estimate of proceeds and what you were going to make when you sold that house was exponentially a higher amount. Whereas, younger Jake would have definitely, done more stupid things with the money, probably bought a fishing boat and done some things. So, I'm glad that you were smart enough to do that. But in my younger days, I probably would not have done that same thing. So that's an awesome scenario.
Yeah. Cool. I think we talked an hour about renting versus buying. So I think this was really good. I'm excited to see if you want to hop on again, what other topics you want to talk about.
Yeah, absolutely.
If anyone has been watching this whole hour, thank you for watching. Comment what you think good topics for us to dive into as well. And maybe that'll just get bumped to the top of the list, and that's what we'll do next. But otherwise, thank you, Jake, for being on. And thank you to everyone that was watching and commenting and joining along in the conversation.
Yeah, thanks for having me, man. And like you said, comment, DM either one of us. We're happy to talk about whatever. We're kind of just an open book. So if you want answers to the test, open the book.
Thank you.